What's up, guys? So there's an article on Barron's that's saying that Mondelez, the maker of Oreos, might be an interesting opportunity right now for securities investors. And so I wanted to dive into it in this video. And so let's dive right into the article. So the article starts off by saying, buy Mondelez stock for the Oreos and everything else. And essentially what they're saying is that and here's their thesis, the shares of the snack maker should benefit from continued growth, especially in emerging markets. And I don't think that they're wrong. And for those of you who don't know, and actually I didn't know until I read the article, but Mondelez is formerly Kraft Foods snack business. So they sell Chips Ahoy's cookies, Cliff bars, and Cadbury chocolate, among other products all around the globe. Now notice the stock is up 15% over the last year. So the immediate question I have is, with these consumer staples type securities, they don't generally run that much in either direction. So when you see a 15% 1 year gain, my question is, how much more steam does this thing have? And so you can see that over the last year, it has traded within a range of around $60 and $80. So a little bit more volatile than what I would have expected from a name like this, but you can see that it has really run up since October. It's trading at a 2024 estimated price earnings ratio of 21 times earnings with a 2.3% dividend yield. So, getting over the hump of it being somewhat undervalued, with a 21 times forward earnings multiple is a hard one, I would think, especially when I read an article on Barron's. And although higher sales are expected, you can see that their costs are actually rising as well. And so something's got to give, and it could potentially be the consumer pulling back, especially in this environment. Look at where the prices of chocolate, cocoa, has gone over the last couple of years. You can see that, this thing is absolutely skyrocketed. Part of it is that, the reason why people aren't necessarily noticing is that, all groceries are up 20% or more. So chocolate, just the jump in the price of chocolate isn't just like out of proportion. However, once again, salaries are not increasing at this rate. And so something's going to give. And this is where there could be a pullback across the board. And so that begs the question, what's causing the price to increase as much as it has for this particular commodity? Well, notice that, the article goes into saying that, more than 70% of the global cocoa supply comes from West Africa. Heavy rains during the 2023 growing season escalated the spread of two infectious diseases which cut into the crop yields. Then, of course, El Nino brought in strong winds to the region that dried out many of the cocoa pods. So this year, global production is expected to be 8% lower. And here's a challenge, because it essentially is stating that the prices will remain higher for longer. We've definitely heard that with interest rates. So it looks like we're hearing that with some commodity prices, specifically cocoa. So they're saying prices that the cocoa farmers receive are set by the government-run bodies in West Africa, and they've all stayed well below the commodity market. The farmers aren't receiving the full price, and therefore they are not incentivized to fix the issues on supply. Now here, that, I guess, it's an easy fix, right? You could just increase what you pay the farmers to get additional supply on. But here's the real challenge, I think, that even if you start paying them more, you're not going to get supply immediately, because the cocoa trees that were killed by the disease need to be replanted, and it takes 4 to 6 years for the new crop to mature and harvest. And so I think that's the real challenge here. So input costs for these types of companies that make these snack foods are going to remain higher for longer, which of course is boding in the opposite direction of what I guess analysts would be expecting in terms of them generating higher sales internationally. Now, I do have to say that that's probably all already baked into their estimates. And you can see that, just getting chocolate to market, cocoa is just 1/5 of the overall input cost. You got quite a bit of other items. Now, of course, cocoa, dairy, and sugar, these have all increased due to inflationary pressures, or of course, from the perspective of cocoa, there was more than inflationary pressures, but overall, you can offset that increase in cost with other areas. So the first question I have is, if analysts are so bullish on Mondelez, where are they currently pricing it? Is it trading at 5 times earnings, 10 times earnings? There's something there. And so from here, you can see that based on the consensus estimate of 22 analysts, they expect the company to make $3.52 next year, which based on their current share price of $71.98, or just called $72, it's trading at 20.5 times earnings. So in a most most optimistic case scenario, I'd put a 25x multiple on this, which is very high. I wouldn't actually ask you to apply a 25 times multiple on their 2024 earnings, but just as an example, it would give you a share price of $88 per share. So that would be a 22% upside. Right away, that's not enough margin of safety. But then the question I would ask is, what about the balance sheet? And so here's where QuickFS comes to help me. So you can see that they do have cash and investments, but they have a lot of long-term debt. And you guys know on this channel that I tend to penalize companies a little bit more for the debt than other investors do. And that's just my own prerogative. I mean, it's just my own style. So you guys can value this however you want, but I would penalize the valuation for approximately $10.50 per share of the net debt. Therefore, that $88 per share valuation comes down to $79 per share, or just a 10% upside on the best case scenario, and that's using a 25 times earnings multiple. So in other words, the run up in the shares, I think, has already happened and the value isn't there for me. But I want to know from you guys, do you think that there's some opportunity here? Now, there are other areas where I do see opportunity. Just looking at the tracker that the Patreons get access to at that lower tier, you can already see that, you know, just from following this channel, you guys know that I believe that Alibaba is relatively cheap relative to its intrinsic value. But then just showing another name, you know, you can see Mastercraft here is trading at around 70% of its intrinsic value. It's not, I wouldn't call that super cheap, but I wouldn't call it super expensive either. And behind this blue here, there's a whole slew of other names. I'm constantly updating these models, and when you click into these highlighted cells right here, you can get into a full model which breaks down exactly how I get to these intrinsic values. It's 31.6 per share for Mastercraft and this 148.8 for Alibaba. And of course, if you're interested, you can get access to all of my models and all of my research at this lower tier of the Patreon. And of course, if you want to join us for a live monthly call where I do a live monthly presentation and provide you with a ton of additional analysis, you can join us at this higher tier. And of course, like I always say, if you ever sign up for either one of the tiers and you don't find any value, just let me know within the first month and I'll completely refund your first month subscription, just because I don't want to take money from anyone who doesn't get value from the Patreon. But of course, our retention is through the roof because there's real value here. Now, I want to know from you guys, is Mondelez a name that you guys are looking into? And if not Mondelez, is there a name that I should be looking at in this space that is somewhat undervalued? Let me know in the comments below, and I'll see you later.